There's a big misconception in crypto. Most people think that it's Bitcoin that's leading most crypto prices. So when Bitcoin is going up, then most altcoins go up as well. When Bitcoin goes down, most altcoins come down. However, there's actually a higher correlation between Ethereum and the altcoins than between Bitcoin and the altcoins. It's really Ethereum that's moving the markets. And so understanding where Ethereum is headed from here is much more important compared to what Bitcoin might do. So let's have a look at the on-chain metrics data most people are not considering. Now first, let's start off with Ethereum relative to the rest of the crypto market. That's what we see in this chart. It's the Ethereum dominance. How much of all of crypto is in Ethereum? And this over the years tends to trade between 7.2% of all of crypto being ETH up to 21% of all of crypto being Ethereum. We bounced off the 7.2% mark in April of this year. This is also when the Ethereum treasury companies got some momentum. But outside of that roughly 100% outperformance, we actually see Ethereum trending downwards. And that's since this point over here. That's when Ethereum moved from proof of work to proof of stake. So that was the merge. The tokenomics of Ethereum have changed as well. Everybody got so excited about the merge. And then it became a sell the news event, despite the tokenomics actually becoming much better. So this is when the merge happened. Initially, Ethereum became a deflationary asset. So the circulating supply went down. But then the usage of the ETH chain itself went down as well. And so the staking rewards outpaced the burning mechanism. As comparison, we've got the Bitcoin inflation at the top. And here's another comparison. This is how much Ethereum supply would have grown had we not seen the merge. Still, even though the circulating supply of Ethereum didn't grow as quickly, ETH tended to underperform the rest of the crypto market over the last 3 years. Now, why is the treasury company narrative not continuing? Why don't we go up all the way to 21%? Why are we trending downwards yet again? One explanation could be that the demand for the Ethereum ETFs has also come down. So that's what we see over here. That's the number of ETH that's held by the various ETF issuers, and if we add this up, unfortunately this has peaked in October of this year. Yes, public companies are still buying, but they are buying at a slower rate in the last weeks. And what's also noteworthy is that it's mainly just the Bitmine. So Tom Lee's Bitmine, the leader that continues to accumulate. The other treasury companies have pretty much stopped their purchases. So let's remove Bitmine from this chart. Just have a look at everything else. Since the beginning of September, there are no further purchases. And so that then begs the big question, right? If Ethereum doesn't see enough demand through the treasury companies, if it doesn't see enough demand through the ETFs, what kind of rollover effect could this have for the rest of the altcoin market? If Ethereum dominance is coming down, will the altcoins come down to the same degree? Potentially not as much. I'm actually more bearish on Ethereum than I am on the broader altcoin market. Now that's in terms of market cap. It's not necessarily in terms of individual token prices, but more on that in a second. This here is the Ethereum market cap relative to the others market cap. So the others market cap is all the altcoins that are not in the top 10, and this tends to trade in a range as well. At the lower end, we are at 0.9. So that's when Ethereum's market cap is smaller than all the other altcoins combined. And it tends to top out somewhere around 2.3, potentially 1.9. So that's when Ethereum's market cap is roughly double the size of the rest of the altcoin market. Now, since this is a relatively constant trend, I don't think it makes sense to be too bullish on ETH. If we take away the very first wave of adoption and we just look at this trading range, then the all-time average price is here, this dotted line. Ethereum might be historically overvalued relative to the altcoins by roughly 15%. If the narrative around Ethereum flips completely, it could lose versus the altcoins by almost 50%. And so if in 2026 we don't see the altcoins appreciate much, this could actually not just be the altcoins getting sold off. This could be just Ethereum pushing down the market as a whole. Now there's another reason to be rather bearish on Ethereum, at least in the short term. This is Ethereum in US dollars. And what we see here as this white line, that's historically the best moving average for Ethereum. I don't really like doing it, but that's how the YouTube game works. That's how the algorithm works. Please give this video a like if what you've seen so far has been useful. Thank you very much. I have backtested various moving averages from the 2-day all the way to the 200-day. And most moving averages tend to outperform just buying and holding Ethereum. So following the trend in ETH makes sense. We want to bet on rising prices. Whenever the price is above the moving average, we want to bet on falling prices, or at least go in cash whenever we are below the moving average. We could take pretty much any moving average and we do better than just buying and holding. There are a few moving averages that don't do as well, but this moving average over here, the 34-day simple moving average, historically has been the best. So have a look at buying and holding Ethereum, that's the line here in white. Have a look at trading according to the moving average. If we only go long and then we just get in cash whenever we are below. So we just bet on rising prices whenever we are above, and we sell everything. We don't do anything with the money whenever we are below. Then we get this chart over here, the line in turquoise. It did outperform Ethereum by quite a bit, roughly a 10x, a bit more than that. Right? Each of those horizontal lines is a 10x. This is a logarithmic scale. So we did get a 10x outperformance, and that outperformance comes 100% simply from avoiding the majority of the bear market. We do not make more money in the bull market, we simply avoid the crashes. Now, instead of just getting into cash, we could also, whenever we are below the moving average, bet on falling prices. And then our performance improves from this to this here. Now in the bear market, we make money. And now we don't have a 10x, but rather a 100x difference. This does make a difference. Ethereum does sometimes get into sustained bear markets. And I think it's quite likely that 2026 will be again a bear market for Ethereum, at least relative to most other assets. But it might also be true relative to the US dollar. Again, we are currently below that moving average. The moving average value, by the way, is currently at $3,085. Now we can enhance this performance even further. We can introduce leverage. Now we don't want to introduce too much leverage, because once we go beyond 4x, we tend to get stopped out. We tend to just lose all our capital. What we see over here, that's the annualized performance on the y-axis and the leverage that we used on the x-axis. Green shows the performance for our long positions. Red shows the performance for our short positions. So we want to use less leverage when we go short than we go long. The optimal leverage for long is 2.5x. The optimal leverage for short is 1.25x. And then we move from this performance to this performance over here. And this is now way more interesting. Of course, we can't know for sure if the same kind of market structure will continue to prevail, but at least in the past, this kind of trading rule of using the 34-day moving average with a bit of leverage to the long side, with less leverage to the short side, outperformed buying and holding massively. Buying and holding would have given us the performance of 1 ETH, right? We would be close to $3,000. But trading according to that backtest, that brought us close to $100 million. Now, I'm not saying that this is a realistic performance going forward, but I am saying that this used to work quite well. And when you are considering using moving averages, then at least plot the 34-day SMA. Don't just completely ignore it, because again, in the past, it was a very nice, steady source of constant outperformance. By the way, I've set up something very similar for Bitcoin. This is a copy trading pool where you follow the best moving average for BTC, which is the 44-day SMA, where we optimize the perfect leverage. That copy trading pool since inception has made a little bit of money, while Bitcoin during the same time period lost 28%. So again, the same concept. We are avoiding losses during a bear market, and then we make more money during a bull market. I'm planning to set up the same kind of copy trading pool for Ethereum as well. I haven't done this yet. This will launch again for the premium members of this channel. The link is down below at thebitcoinstrategy.com. Outside of just those strict trading rules, I of course also do my own relative valuation trades. This was the premium capital pool where everybody could deposit and participate in my own trading. That ran for 5 months, made 17%, while Bitcoin lost 25%. So if you're interested in that, again, the link to Premium is down below. We try to make money independent of the general market. We try to make money using backtests and using relative valuations. What's currently cheap versus expensive within the crypto space. If it's your first time here, feel free to subscribe. I publish videos regularly. Like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you on Premium. Cheers.